Let's get more reaction to Apple's results from Toni Sacconaghi. He is a senior analyst at Bernstein. He just on Monday upgraded Apple to outperform from market perform. He has a $195 price target, so maybe still a little bit of upside from these levels, but they've certainly made you look quite prescient given your call on Monday. What gave you the confidence to upgrade the stock at that point in time? And do you think, kind of given what you've seen, there's still significant room to run from here?
Good afternoon, Leslie, and thanks for having me on. I think, our sense was that expectations were quite low going into the quarter. Investors were fearful about China being weak, and that even if Apple did, guide below expectations, that was widely anticipated. And once this guidance was passed us, investors would feel confident looking ahead to a whole series of new product offerings, new iPads being announced next week, new iPhones in September, which we think will have AI capabilities, and then likely new Macs and AirPods as well in the second half of the year. So our contention really was that expectations were low, and once we got past this quarter, almost good or bad, the stock could be poised to run up, given that it had underperformed by about 20% year to date and was trading at, below its recent average multiple levels.
And Steve, I wanted to ask you about China in particular, and if you could help us kind of make the distinction between mainland China and the greater China, because mainland, I thought the whole narrative surrounding the slowdown there was this idea that the Chinese economy was slowing down and therefore, some iPhone sales were declining as well. It was becoming also out of favor relative to some of the more hometown brands in that area. But greater China, if Tim Cook is saying that mainland is growing, where are they seeing the pockets of weakness that bring down kind of the greater China sales as a whole?
Yeah, they didn't really talk too much about that, Leslie, yesterday, but there are some things of note beyond that, just the iPhone. First of all, services were up. That kind of helped things, too. But also, keep in mind, it's been since the fall of 2022 since Apple last released an iPad. So that could have been some of the weakness that we've been saw in China the last quarter. So take that into account. By the way, the CFO, Luca Maestri, also said to expect double-digit growth to return to the iPad because, as Tony just mentioned, we're going to get those new models next week. So that should finally give people a reason to buy an iPad again. But yeah, mainland China is kind of countering that narrative. We had those reports out from Counterpoint Research and IDC in recent weeks that sent the stock down on these fears that, Counterpoint saying iPhone sales were down 19%. Well, Apple, that's not what they were necessarily showing yesterday. And of course, like I said, Tim Cook told me iPhone is showing momentum and growth out there. So, I'm looking a little bit more skeptical at these reports we've been hearing out of China. I'm not sure where they're exactly getting the data. And it's clear that there's a huge disconnect between what the third parties are saying and then what Apple actually reports out there in China, Leslie.
Hey, Tony, it's Dom. $110 billion buyback is nothing to, sneeze at right here. It's a lot of money. I know that Apple generates a ton of cash and that the buyback story is a big part of the whole investment thesis for Apple. But what happens if they take that money or even a fraction of it and plow it into things like artificial intelligence, hypothetically? I mean, wouldn't it move the needle?
Good afternoon, Tom. So the buyback is a very large number, $110 billion. They've been upping their buyback. Last year, it was $90 billion. This quarter, they bought back, I think $25 billion worth of shares. So they're on pace to buy back about $100 billion worth of shares per year. That helps EPS growth by about 3 or 4% per year. So that is an important part of Apple's model. I think in terms of AI investments, many companies are raising their CapEx. A lot of it is for compute for AI. Apple has a kind of a hybrid model where it uses some of its own compute, but increasingly it's using the data centers for other vendors, like a Microsoft or an AWS. And so it's paying for that. That's in its income statement. It's not a capital expenditure. And so as a result, Apple's capital expenditures are relatively low. They're only about $10 billion a year. You're hearing about some of the other Magnificent Seven, spending 40, 50, 60 billion dollars per year on CapEx, in part for AI. Apple's saying, hey, we don't need to lay out that cash in terms of a capital expense. What we'll do is we'll just pay for ongoing use of third-party compute services for us to do our work on AI.